Good afternoon, everyone, and thank you for joining our Aktion and Avalara webinar. My name is Sullivan Sanders, a marketing coordinator here at Aktion Associates. Without further ado, let me go ahead and introduce today's presenters. We are joined by Senior Strategic Alliance member, Michael Dominguez, Avalara Software Specialist, Chad Tenery. I'm going to go ahead and hand on over to Michael to get us started.
Wonderful. Thank you, Sullivan, and appreciate the introduction. Again, my name is Michael Dominguez. I'm a Senior Strategic Alliance Manager. That means I manage partnerships in the mid-ERP space here at Avalara. Been at Avalara for 3 years. And Chad, if you're there, if you want to just present yourself real quick.
Yes, good afternoon or good morning, everyone. I'm Chad Tenery, and I'm on the sales side here at Avalara and work with only Acumatica clients. So nice to meet everybody and looking forward to today's webinar.
Awesome. Thank you, Chad. So we're just going to jump into it. For those of you who aren't familiar with Avalara, so Avalara was created to alleviate the burden of tax compliance. So here at Avalara, we're a global company. Our headquarters is actually in Durham, North Carolina. And we have about 14 offices worldwide with over 5,000 employees. We celebrated our 20th anniversary last year. And you can see there, we have many partner integrations, and a really big surprising fact here is that we serve more than 43,000 customers from over 75 countries. We have a very scary goal at Avalara, and that's to really be part of every transaction in the world. And you can see by that number of API calls from Avatax at 50 billion, we're definitely making a concerted effort to get there, mainly through the help of our partners like Aktion. All right, so what makes tax compliance so challenging? I can kind of feel for that gentleman down there who is looking up and at this cloud of worry. My background is I used to run a large winery, so I was in charge of manufacturing and distribution, and we had to keep up with a lot of these different things when it comes to producing and selling and shipping wine. So, you know, all of these things are probably running through your head, depending on what you do with your company. You know, you may be dealing from everything with trying to track tax rules or really even understanding what Nexus means, in addition to like where you may have Nexus. Maybe you are trying to calculate your sales tax accurately. Maybe you manage a lot of exempt certificates because you don't do a lot of sales tax because you're mainly doing reselling activities. And then trying to figure out, you know, just your returns, right? If you have obligation to collect and remit sales tax, to manage those, are you reporting them correctly, depending what jurisdiction and state you're supposed to be providing those remittances to. So again, it is very challenging, it is very stressful, and that's why we're here on this call today, to really just kind of simplify all of this. And just give you some steps that could help you manage your sales tax compliance and that burden, and maybe relieve some of the headaches, like you saw in that previous slide. I've given a lot of webinars at Avalara, and I really love this slide because it just breaks it down into 5 steps. You first need to understand where you have Nexus, right? Next step is you're going to register to collect and remit sales tax in those states that you have Nexus in. Third step is you need to be able to calculate the correct sales tax based on the jurisdiction. And this is kind of the tricky part because there's over 13,000 different jurisdictions out there in the United States. Next, you have to track and manage those exempt sales. And then finally, like I mentioned earlier, you have to be able to remit sales tax to the authority if you do have Nexus and are licensed in those states. So without further ado, we're going to go a little into, that's like the overview of the 5 steps, right? We're just going to dive a little bit more into each of these 5 steps. As mentioned earlier, if you have questions, please let us know, put them in the chat, and we're happy to address them. All right, so understanding where to remit. In 2018, there was a Supreme Court ruling of South Dakota versus Wayfair. Before 2018, companies only had to worry about having physical Nexus. But after that point, companies had to make sure that they were doing the rules correctly if they had economic Nexus, and I'm going to get into that shortly. So these are all the new nexus generating activities to include the physical nexus, right? You have multi-state locations. If you have remote sales, that could trigger a nexus creating activity. Maybe you have data centers, right? That's a big push now, especially with the huge jump towards AI and the building of so many data centers across the United States. Maybe you have some investors or board employees that are outside of the state where you're headquartered. And then, of course, you have commissions to resellers. So this is just a good list. You'll get these slides afterwards. Just be aware of these other nexus creating activities. Did you want to touch any more on that, Chad?
No, I mean, this is obviously you'll go through where the game's really changed, but back before everything changed, this is exactly all the activities that would create nexus. There's a lot of confusion out there. In this slide, I agree, Michael really does a good job of really showing all the different ways that companies can create nexus.
Cool, thank you. Oh, I went one too far ahead. So these are different types of nexus. I kind of touched on them on the previous slide. So you're aware of physical nexus, of course, economic nexus. I'm going to touch on this more because it is really important to understand because each state's different on our economic nexus thresholds. You have click-through nexus. That's if a seller meets sales threshold in the state from the activities. Maybe you have an in-state referral agent. Affiliate nexus, let's say you have a remote retailer who has substantial interest in or is owned as an in-state retailer that sells the same or similar line of products under the same or similar name. So like think of affiliate, remote retailer. Then of course, marketplace nexus, right? And any of y'all doing business with any type of marketplace facilitators, they'll have to make sure that they're collecting and remitting sales tax. All right, so this is where I said it gets a little complicated, especially if just economic nexus is new for you in general. Each state is very different. You could see some of the higher states with economic nexus thresholds like Texas, California, and New York. And what's really important to realize here are the different rates at which states establish their economic nexus thresholds. And it's also important to realize that these sales tax, like economic thresholds, part of your exempt sales may also be part of that and are usually included as part of these nexus thresholds by these different states.
Michael, can I jump in just real quickly as you're about to jump in there? So really quick, this provide a little bit more insight on really what changed the game. Back in 2018, just from educational purposes, there was a dispute between South Dakota and Wayfair, where basically South Dakota went to Wayfair and said, hey, basically our residents are purchasing products from you online, but we're collecting no sales tax revenue. So they're losing revenue. Their residents are buying all these products. So in 2018, South Dakota won. And once South Dakota won, that's what triggered this economic threshold. So at that point, what states did, instead of just companies, organizations creating nexus through physical presence, inventory, 1099 employees, warehouses, office locations, things like that, what the states did is they created their own thresholds that would then trigger nexus, which would mean those organizations or companies would be liable in that state, or to be compliant, they would need to register and start collecting and remitting sales tax. So as you can see from this map, California, Texas, New York, they're about $500,000. So in that case, if let's say a company sold over $500,000 in those states, they would at that point, if they sold to $500,000 and or let's say 200 transactions, that's what would create economic nexus. And what Michael's about to show on the next slide is the difference between how some states recognize tax exempt sales and how some states identify taxable sales. So some of the misnomer out there is, well, my company, we have 100% of our sales are tax-free. That's great. But a lot of states, there's 40 states across the country who actually, where tax exempt sales do contribute to economic nexus. So it's not only just taxable sales, exempt sales also contribute, whether you're 90%, 100%, or it's a 50-50 split. And you can see here on the map with all the color coding on the maps of the states that do include tax exempt sales as part of the economic nexus obligations.
No, I appreciate it, Chad, and thanks for adding that color. And Chad's absolutely right. As a partner manager, I travel extensively on the road, go to various trade shows, and a lot of manufacturers and distributors will share, hey, Michael, I'm mostly tax exempt, and it's a constant reminder that you can see that the majority of these sales include those exempt sales into the economic nexus because there's opportunity for those states to generate revenue, right? And especially to be able to hit you with a fine if you aren't collecting those exemption certificates and managing them accordingly and reporting them accordingly. So I appreciate that, Chad. All right, so that's the first step, right? Understanding where you have nexus, and you can see that's complicated enough. So next, once you understand where you do have nexus, which state you have a nexus obligation, you need to register your business. And that's through the Avalara sales tax registration. So basically this helps simplifies and speed the process of securing US and local sales tax registrations. There's a step-by-step online guide, and there's a 5 to 7 turnaround time during which you can track the status of an order. So this gets you registered in those states where you have an economic nexus obligation. The next piece is looking at the calculation of sales tax. This is if you do have sales tax to report. We like putting this slide up because it shows you how quickly our AvaTax integration with Acumatica and Aktion is able to basically account and create the right sales tax. So we'll just run through it real quickly. Once you hit the purchase, the AvaTax validates and/or corrects the address. You apply the right sourcing rules there in number 2. Assign the applicable jurisdiction. This is a really complicated part because, as I mentioned, there's over 13,000 jurisdictions in the United States. This really key point here, right, is step 4 is checking if there's an exemption status. Step 5, identifying the product taxability, because there's different taxability for different products out there. 6, we can't forget about those wonderful tax holidays, right? 7, apply the tax rules and regulations. 8 would be sending the correct sales tax back to checkout. And then finally, a very important piece that we can't forget is storing in the information for future remittance, right? To make sure that you're reporting properly. This is kind of a fun slide because it shows you how each state is, again, different. You can see here in the blue are taxable products, and then the orange are ones that are exempt products. And in different states, for instance, toothbrush and dental floss are taxable in New York, but they're not in Pennsylvania. One that I find especially interesting is that the powdered drink mixes in New York, that Kool-Aid's taxable, but Tang is not, maybe because Tang's good enough for astronauts, so it shouldn't be taxed. But you can see here that this adds a lot of confusion, and imagine if you're trying to do this manually. So Avalara can help automate this because there are numerous product taxability challenges out there. Did you want to add anything more on this, Chad?
Yes, Michael. I mean, this is where with clients I work with, this is where I typically see a lot of production being spent manually to make sure everything's being calculated correctly. Because every state has their own rules, and being able to stay on top of that is almost like a full-time job because laws are constantly changing throughout the year. For example, there was about 26 updates about 26 different states around the retail space this July. So keeping up with all that is a manual task, and it's kind of a part-time, full-time job. And that's what our solution and technology takes care of. It automates this complete process, and it will always continue to keep update in real time along with those tax changes, because states do let us know. We actually have a couple of states who are clients of ours actually who use our technology. So just to add a little bit more in there, because it is a production suck. It really does reduce a lot of production.
No, I'm glad you mentioned that. When you say production, a lot of time and money and resources at your companies that, as a reminder that this isn't, compliance isn't a revenue generating activity, right? It's obligatory. So you could be freeing up those resources to, whether it's help in sales or marketing or in your accounting department on other projects that could help with revenue generating activities. So that's a great point, Chad. Thank you. Okay, so step number 4, we need to track. So what do we mean by that? We need to understand those tax-exempt sales. So for any tax-exempt sale, again, which happens a lot with manufacturers, distributors, corresponding exemption certificate is required to prove exempt status if the company has nexus. You saw in those tax-exempt states, there's 40 of them, right? So you want to make sure that you're managing those exemption certificates accordingly and that you're reporting them. And that this form is presented by an exempt organization or an individual to the seller. So I really like this slide because it helps frame what transactions are tax exempt. It could either be through a buyer's business status. So you all are familiar with nonprofits, charities, religious organizations, educational institutions, hospitals, or the government, federal, state agencies. But where it'll apply to you, most likely if you're a manufacturer distributor, is your intended use of the goods sold, right? Is the merchandise intended for resale? Is it used in a product that will be resold? Does it have agricultural and manufacturing applications and tangible personal property purchase to lease or rent? Again, this is just a good reminder of those transactions that are tax exempt. And again, you'll be getting the slide deck too and good reminders, and feel free, of course, to reach out to us if you have any specific questions on transactions that are tax exempt. And then this slide, I think does a very good job of showing you just a tax exemption resale example in the auto supply chain, right? So you have components manufacturer that are basically the seller to the buyer being the parts manufacturer, right? We're just going up the chain here, but you can see those are tax exempt purchases from the components manufacturer to the parts manufacturer to the car manufacturer, all the way up to basically the dealership. And then the paying sales tax piece goes to the end buyer, right? Going to that person who is buying the vehicle. So I like this one because it does a good visual overhead kind of representation of all the different pieces there. If you're a company that's involved as a components manufacturer, parts manufacturer, car manufacturer, even dealership, of collecting and managing those exemption certificates. Did you want to add anything to this slide, Chad? Anything that you've seen in particular for businesses you've worked with that may have not realized that they should have been managing certain exemption certificates if they're in any like similar industries?
Yes, I think you hit it right on the head. I think this is a great slide. I come across clients on a daily basis who are struggling one way or another, not knowing if they have valid tax exempt forms, if they are the correct forms, if they've expired. But it is absolutely to be compliant, and it's a requirement to ensure that as an organization you're covered either way from a transactional standpoint. Always being able to prove this is why we charge this sales tax. This was the correct sales tax in real, when that transaction went through or was processed, or here is why we didn't charge sales tax, and here's the tax exempt form that accompanies this transaction. So. I think this slide is great. This is actually the first time I've seen this slide.
Yes. Thank you, Rebecca, because she was able to define this one. And it is always kind of difficult, right, to explain tax exempt status. But I really like having had a manufacturing distribution background, see the supply chain, right? Because then you could identify, or you understand as the companies that are attending this webinar, where you sit in the supply chain, whatever industry it is, right? So again, just a good resource, something to consider as you look at your business, as you're thinking about oh, maybe I should reevaluate where I may have nexus. Am I registered in that state if I do have nexus? And am I correctly managing my exemption certificates? And you may not have realized that there's a certain part of your business where you should be collecting those exemption certificates.
One thing I'll add just real quickly, on average, and we do a lot of these webinars, on average, it takes, and I've had customers actually say it takes us an hour, but on average, industries shows that research shows it takes 30 minutes on average to collect one tax exempt form. So if you start thinking about all those multiple customers and all the interactions, and that 30 minutes really comes down to a lot of back and forth. Is this the right form? It usually is going through 2 or 3 different people to ensure, sometimes it's salespeople are collecting them. Sometimes it's someone in the tax department. Sometimes they're not getting collected at all. And that's another reason or component why it adds up to that 30, 45 minutes, because there's a lot of people typically a part of that process where, leveraging, a technology like ours, it completely automates that process, removes everybody out of there, which also at the end of the day increases production, but then also ensures that every tax exempt form is valid and is not expired, and you're covered if for some reason there was ever a look back to see why there wasn't a tax, why this sale was or was not taxable.
Yeah, I'm glad you mentioned the validation of the exemption certificates, Chad. I was recently on a business trip with a partner, and one of their customers were struggling, number one, because they were manually doing it and not sure if they were validated correctly. And in that process, they were realizing that there was a certain vendor that wasn't filing it correctly, right? So you just had to be aware that, some of the vendors you're asking exemption certificates for, it may not be someone that's familiar with the process and is just filling out the form incorrectly, right? And so it's not only like a time issue, but more importantly, just making sure that those exemption certificates are validated, and Avalara can obviously help with that. All right, so a very important piece here to bring it full circle is remitting sales tax to the tax authority. We're going to touch here, I think, very shortly on some slides talking about how the states demand the tax revenue, because it's such a big part of their overall revenue in order to keep basic functions happening within their states. So to run through it real quickly, once sales tax is remitted, those funds need to be remitted back to the jurisdiction. Each tax authority has unique requirements around remittance. Sales tax returns must include aggregated data across all sales channels. And here are some nuances. I experienced this personally at the winery I used to run. Each state had a different requirement for how they wanted to be paid, right? Some were, back in that day, 10 years ago, paper mostly. Online remittances is usually the case now, which is very nice. You have different due dates, right? Each state maybe have different due date requirements. Sometimes there's prepayment requirements, handling of tax notices, filing local jurisdictions. There's late payment fees, of course, and then there could be like multiple payment methods. So it's very nuanced, and Avalara can help you and your company with this by basically filing those returns. And then also we even act as a treasury working with you to make sure that there's funds available to be able to just take it off your hands, and so you could outsource that to us as well. And this is the managed returns piece. I like the example here from Dylan's Candy Bar. When it comes to returns, it was obviously a huge burden for them, but now they're able to answer with confidence and authority now. And the auditors have moved on to someone else, which is nice, right? I'll touch on this very shortly, but once you're audited, the auditors usually come back, right? Because they found something there, and even if you're able to prove it and not get a fine per se, they usually come back. So this helped this particular company, Dylan's Candy Bar, with $100,000 in savings and back taxes, interest, and penalties per year. Again, managed returns, it's a time suck, right? If you're doing this manually. So it helps your company save time, lower costs, stay compliant, and then integrate seamlessly with the integration that we have with Avatax and ECM with the integration with Acumatica. Okay, we went through a lot of steps there, right? But hopefully the scary cloud above the gentleman at the first slide, you can see that there's a structure and way that Avalara can help you just manage those 5 steps of tax compliance. But we wanted to give you some updates on just some of the economic pressure that meets an audit opportunity. We really like this slide because it shows you how states may fare in upcoming years. You can see the states there that have challenging short-term or fiscal outlooks, which means that they'll probably be wanting more sales tax, right? They'll be wanting to increase their coffers because their budgets are low. Those include Washington, California, Colorado, Illinois, Pennsylvania, New York, Maryland, New Jersey. And then to add to that, I kind of alluded to this earlier, but sales and use tax makes up almost 30% of a state's revenue, right? So the states are getting meatier and greedier, if you will. And so they're looking to collect that sales and use tax in order to be able to operate the general functions of their state. And just like Avalara, we and all companies are utilizing AI to help automate our processes. You can bet that the tax auditors in different states are using AI as well and data mining, trying to discover companies that may not be compliant in their businesses, whether they're not reporting or registered in states where they have triggered economic nexus. State auditors, they're hiring more auditors, they're sharing information with other states to target non-compliant businesses, they're increasing out-of-state audits, encouraging whistleblowing, and just as a reminder that depending on the state, an audit for past years, it depends on the state's statute of limitations, but could go back to up to 8 years, again, depending on the state. So it's just a friendly reminder that, you know, when the states need these revenues, they invest in these sales and use tax audits.
Yeah, if I could add something, Michael, the states are really getting aggressive, especially since COVID. They're also using ways to scrape websites, look at marketplaces, online marketplaces around, you know, with Amazon, Walmart, things like that. Like whistleblower, as you just said as well, they're doing a lot of that. There's actually 2 states who are outsourcing their ability to find companies who have triggered economic nexus. They've actually outsourced that to third parties. So these states are continually getting very, one, aggressive, but also very creative in ways that they've never been able to do before, but using technology, like Michael said, with AI and other types of technologies to be able to go out there and find those, you know, find those organizations.
Great, thank you, Chad. Okay, so I'm gonna go through this slide because I think it's just a good reminder on, you know, if you're using manual process in your company, that increases your, it creates risk, right? And Avalara helps you connect it all so to keep you compliant. So you can see here that a lot of times in businesses, depending on the size of your company, perhaps you have sales tax siloed from use tax. When you have that type of manual review, you're increasing your risk. And that could lead to, again, frequent audits. You know, auditors definitely like manufacturers because they usually have some type of use tax obligation and may not be collecting their exemption certificates accordingly. There's variable taxability rules. So taxability, again, depends on use, location, product type. That could lead to confusion and compliance risk, especially if you're doing this manually. And then I really like to harp upon this is just the limited visibility. Again, having siloed teams and manual processes limits that visibility into tax obligations and slowdowns response times. And so, you know, if your teams aren't communicating and approaching tax compliance holistically, looking at that sales and use tax, you're just increasing your risk for an audit. Okay, so here's how Avalara can help. We have our core products and services, which you all may be familiar with. We've talked exhaustively about exemption certificates. So we have exemption certificate management to help your company. Again, that's integrated automatically into Acumatica. We have sales tax calculation. That's our AvaTax product that also integrates seamlessly with Acumatica. Tax returns and reporting, we touched a little bit on that. That's that fifth step, right? About making sure once you've triggered economic nexus, you've registered in that state, you have to make sure that you're not only collecting, but you're remitting to the tax where you have some type of reporting obligation. E-invoicing and live reporting is coming. It's happening outside of the United States. Many countries have mandated e-invoicing. So we support that outside of the United States. Supporting products, as we discussed, licensing and registration. We also support companies that do any cross-border activity. So our business has definitely picked up on that, especially with the different changes in the tariffs this past year. We support 1099s and W-9s and property tax. And Chad, did you want to touch on Avalara Tax Research? I don't know if a lot of companies are familiar with that product.
Yes, Avalara Tax Research basically is a database full of tax laws, where basically you can go in, understand taxability, where companies really, clients I work with really see value in it is if they're heading into a new state, they don't know all the rules, they don't know if this service or good or product is taxable or not taxable, because again, every state has its own laws. We've also added AI into the equation, where there's actually a chatbot that allows clients to go in and ask specific questions. Some of these situations where I see this even really being valuable is a lot of times there is, if you find this in your day-to-day on a monthly basis, when a customer says they're not taxable, the law says they are taxable, there's a lot of back and forth. And within this technology, you can actually email the law straight from the technology itself, straight over to that customer to say, this is why this is taxable, because it follows into these guidelines. And one thing that I also really like about it is in plain language. So, one of the reasons we're in business, right, is because managing and understanding tax laws is a challenge. And also understanding the wording is a challenge a lot of times. And this really simplifies it, really puts it in basic language, so customers can understand this is why I'm paying this, or this is, why it's taxable or non-taxable. It also equips you with a group of tax experts that are at your disposal, a team of 4 to 6, I think, that you can always go in and ask specific tax questions that are unique to your business that you cannot find within the database. It's an excellent tool, and we have two different versions of it for two different purposes.
No, thank you, Chad. I wish I would have had this tool about a decade ago, because I also handled compliance for the winery I managed, and we sold into most states, and each state is different. So I remember having to look at each state's website, and I'm not a lawyer, I'm not an accountant, and it took so much time. And so I've seen demos of this Avalara Tax Research UL, and it's really a fantastic tool. What I also like about it is it can go by industry as well. So let's say you're manufacturing or distribution, you can dial in on those. And then you can also look, and if you're looking up a product taxability question, you could look up that product, and it could go against a number of different states too, if you have if you ship the product to other different states as well. So it's really a cool tool to check out and to consider. So obviously we have integrations, APIs. Obviously we have the integration of AvaTax and ECM with Acumatica. We also have integrations with various e-com platforms as well. Depending on the size of your company, I don't know if you briefly want to touch upon streamlined sales tax, Chad?
Streamline sales tax, basically it's, or SST, if you see the acronym, basically what it means is 24, 25 states came together. We're one of a few vendors out there that actually provides this service to our clients. But basically these states came together and again, there's about 24, 25 of them. And what it means is basically we help them kind of collect, sales tax and for those states. And these programs, what it does is it limits the amount and what it gives to companies, customers of Avalara is like free transactions, free tax returns, remittance. So there's a lot of value in the SST program. And again, it's a way for states to, to continue getting revenue, and they leverage us to do that. It's a great program. It really reduces a lot of cost for a lot of clients that I work with who take part of that program.
Do you know how many states that have that agreement with us for the SST, Chad?
At least 24, but I think there's been another one added where I think there is a 25th. I just can't recall off the top of my head who that is.
Right. So if y'all are doing business in, at least 10 different states, it's maybe something to look into and see if those states match up with the agreements that we have for SST, because like Chad said, it's definitely something to look into. We have a sales tax risk assessment, which helps you identify where you have nexus. Then we obviously provide support with implementation, training, and any other required additional support. So you can see really the full gamut of tax compliance. We're here at Avalara to support you and your businesses to be compliant. And I'm going to hand it off to Chad. He's going to do a little bit of a deep dive on exempt sales and nexus with you all.
All right, thank you, Michael. So nexus and tax exempt sales considerations. Again, there's a lot of misnomer out there, which makes sense, right? Where taxable sales or non-taxable sales, and there's some confusion, also do contribute to nexus. And, again, a majority of the states across the country. So here's some considerations, inclusion of tax exempt sales and nexus calculations. At that point, you need to register along with their filing requirements to be compliant in those states. And the exemption rules differ by states. You have some states where tax exempt sales do contribute to nexus, but services may not, or resale may not. There's a handful of states where tax exempt sales do contribute, but resell sales do not. So it's really important to understand, what states that you're doing business in are where non-taxable transactions are contributing and not. That is, again, what our system is designed to do, is to help you understand and make sense where, if it's taxable, we will charge sales tax. If it's not, and also within the technology itself, you can track your economics nexus requirements, and that takes into account taxable and non-taxable along with all those rules. And again, they're changing on a daily basis. I think quite a few states recently now are starting to tax digital sales. So, again, it's a never-ending process, a never-ending task to keep track of all these changing rules. I know you saw this slide earlier, so I'm not going to cover it a lot, but this is another example. I know you'll get this deck following the webinar. I'd encourage you, if you do have a lot of tax exempt sales, maybe go back and see, okay, where are we registered, match it up against this map. As Michael also said, we do have a risk assessment as well that I do with clients all the time. I'm working actually probably with 4 or 5 clients, oddly enough, that have found themselves in the situation you're looking like at up here, where they've been doing business across the country for, some back to 1975, 74, and they're only registered in one state, but they've been selling nationwide across the country for years and had no idea that they've triggered economic nexus. There's about 4 or 5 I'm working with where they've triggered it in about 40 different states. So how we determine that, we worked together and we did a risk assessment, and that's how we identified these are the states where, you are at risk here. So, as you're reviewing the content and following the webinar, that's a free service that we offer. It's something I do with clients on a daily basis. So please don't hesitate to reach out, if there is some concern there, and we can do that nexus review for you as well. because at the end of the day, the burden of proof is really on you, right? The customers. And, again, through any audit, and by the way, tax exempt sales are low hanging fruit for auditors. They just are. It's very easy to go in and, and say, hey, let me see this, history of transactions. Why did you not charge sales tax? Well, they're non-taxable sales. Well, let me see that transaction. Let me see that document. And that's where I find a lot of clients can get in trouble because they don't have that documentation. And that's one of the one of the benefits our technology provides. And, at the end of the day, what does make a tax exempt sale? It's more than just nonprofit. You have resale, as you know, direct pay permits, software as a service. Again, there are states that charge sales tax, and there are states that do not charge sales tax. Government, manufacturing exemptions as well, and product-based exemptions. The last slide, and I usually actually review this with prospects all the time, because especially those who are majority in the non-tax exempt world. But this is an example. I mean, you could call it a drastic example, but it is a real life example. I had a client I worked with last year. They were fined $150,000 after spending a year to get prepared for the audit. They were then fined $150,000, and they were fined $150,000 out of 3 customers, and not having tax exempt forms. Now, it was more than just 3 non-tax exempt forms. It was 3 customers who were selling across the country. Now, after another year, they were able to wiggle it down to about $45,000-$50,000 in penalties and fines. But all the time spent year to prepare, a year after, all that lost revenue, they would have had, their tax exempt forms on those transactions. There would have been no penalties, and their audit would have gone much faster and a lot better. But this is an example. So, your business gets audited. The auditor will review 1 month sample for audit purposes of a period of 36 months. Okay. In this example itself, the auditor found there was a $15,000 sale. There was not a valid certificate on file as part of that transaction, and it resulted in uncollected tax revenue, so about 8% or $1,200. What they did is they didn't take that $1,200, multiplied it times that 36 months, basically, and in this example right here, the certificate cost them $43,200. So this is a real use case. Unfortunately, we do see this a lot. Within Acumatica has a great tool that allows you to store those as well. The connector we have that's pre-built, that's built by Acumatica, that connects Avalara into Acumatica. The pre-built connector not only calculates automatically sales tax in real time, but you can also work within Acumatica to collect, monitor, manage, utilizing that same connector with our cert capture or our exemption certificate management technology. So there is an ecosystem out there in place, and you can utilize the same connector to ensure you are collecting or charging the correct sales tax on every transaction. And if there's it's a non-taxable sale, you will have that document that will show this is exactly why we did not collect sales tax, and it will be correct. And it will be valid as our system is intelligent enough to know, for example, like in Florida, if you were selling in Florida, those tax exempts, those forms expire after every year. So it's a company's obligation to go out there and recollect those tax exempt forms from those customers who are selling in Florida.
Awesome. Well, wonderful presentation, Michael and Chad. Thank you both so much. I'm in marketing and I learned so much from that myself. So thank you, gentlemen. We are now going to roll into the Q&A session. If you have any questions, feel free to ask them in the Q&A box and we'll get to them shortly. I know we have a couple in there right now. But alrighty, let's go ahead and start this Q&A session. Alrighty, so first question. Are there special tax rules for Delaware?
I don't know that. Yes, I would say there's special tax. That's a good question. I would say there's special tax rules for every state. I don't know exactly what the laws or rules or whatnot in Delaware specifically. But yes, every state has their own rules and regulations that are changing all the time. So I'm sorry, I don't know the exact answer on that one. Even if they don't charge sales tax, right? You don't charge sales tax in Delaware. I imagine there's still a lot of special rules in different areas.
Awesome. Perfect. Alrighty, next question. Texas offers a 20% exemption of the cost of SaaS products. Can you help to manage this sales tax calculation to make sure only 80% of the tax will be charged?
Yes, it will. The system automatically manages that. So it's not a physical person managing that. It is it's automatically determining that within the technology. So it's basically what it's doing is it's ensuring you're not having to go update tax tables, you're not having to figure out all these rules and make sure that every transaction is being calculated correctly manually. I have a lot of clients who do that. But once they install our technology and start the tax engine, it takes all that work off finance's plate, basically.
Awesome. Perfect. Alrighty, well, it looks like there are no more questions right now. But if you do think of any in the future, please feel free to contact any of the presenters or myself directly. And you're also welcome to reach out to your account managers, and they will be happy to answer any questions that you do have. Alrighty, thank you again, gentlemen, and thank you everybody for joining us. Everybody have a wonderful rest of your week.